Obamacare premiums in 2026, why they're rising and what to do. 1. This could hit your wallet harder than you think. Imagine this: you log into your health insurance account during open enrollment in 2026, only to find your premium has gone up by hundreds of dollars a month. No warning. No major life change. Just a huge spike. Sounds unfair? Unfortunately, this could become a reality for millions of Americans relying on Obamacare. If you're an immigrant, a freelancer, self-employed, or a middle-income family, this spike might hit you hardest. Let's break down exactly why this is happening and, more importantly, what you can do about it. 2. The main reason behind the spike. The biggest driver of the premium increase is the expiration of enhanced subsidies that were part of the American Rescue Plan, ARP, and later extended by the Inflation Reduction Act. These subsidies made health insurance more affordable than ever. But unless Congress takes action, they'll vanish after 2025, leaving many people with full-price premiums starting in 2026. That's the financial cliff everyone is talking about. 3. Other factors pushing prices up. While subsidies get most of the attention, they're not the only problem. Other factors include medical inflation. Healthcare costs keep rising due to hospital charges, new tech, drug prices, and provider shortages. End of temporary government protections. Programs like reinsurance and risk corridors that help stabilize prices are being scaled back. Insurance market uncertainty. Political debate over ACA and state-level changes make it harder for insurers to price plans predictably, so they set rates higher just in case. 4. Who's going to feel it the most? Not everyone will suffer equally. Here are the groups most vulnerable to premium hikes. Middle-income families, especially those making just above subsidy thresholds, they'll feel the full cost shift. Immigrants and green card holders, many of whom rely on ACA plans and don't have employer coverage. Freelancers and gig workers, no employer-sponsored plans, so they turn to the exchange and now face higher bills. Older adults aged 50 to 64, before Medicare eligibility, insurance costs can skyrocket if subsidies are reduced. 5. What do the numbers look like? Let's break it down with examples. A 40-year-old earning $40,000 per year could see their monthly premium increase from $140 to $260. A family of 4 making $85,000 might go from paying $600 per month to over $850 per month. These jumps could mean paying $2,000 to $3,000 more each year, just for the same coverage. 6. What can you do about it? If you plan ahead, you can reduce the impact or avoid overpaying. Here's how. Compare plans every year. Don't auto-renew. What was affordable last year may not be in 2026. Explore off-exchange private plans. Some insurance brokers can help you find better rates or plans that aren't on the ACA marketplace. Look into Medicaid or CHIP. Depending on your state, income level, and family size, you might qualify, especially if Medicaid expands in your area. Use a licensed health insurance broker. They often offer free consultations and know how to navigate complex plan options. Consider high-deductible health plans with HSAs. If you're healthy and rarely need care, these might save you money long-term. 7. Is Congress going to act? This is the million-dollar question. Many Democrats support extending enhanced subsidies, but the political gridlock in Congress means nothing is guaranteed. If no bill passes in 2025, the subsidies end automatically, and Americans will face the full brunt in 2026. Pressure from voters could influence lawmakers, which is why staying informed and vocal matters. 8. Are there alternatives if Obamacare becomes too expensive? Yes, but each comes with trade-offs. Alternatives include short-term health plans, typically cheaper but offer limited coverage and may not cover pre-existing conditions. Health-sharing ministries, faith-based programs that act like insurance but aren't legally obligated to pay claims. Private plans via brokers. Some insurers sell plans outside the exchange that might fit your needs. Direct primary care, DPC. Pay your doctor directly for access to care, often at a monthly flat fee, great for basic services but doesn't cover hospitalizations. 9. How to stay ahead of the curve. Knowledge is power. to avoid being caught off guard by premium changes in 2026. Follow updates from your state's health insurance marketplace. Track open enrollment periods, OEP, and special enrollment periods, SAP. Set reminders to compare plans and reapply for coverage every November. Subscribe to trusted healthcare news sources and YouTube channels like Insurance Explained USA. We break complex updates down simply and clearly. 10. Final thoughts. The future of health insurance in America is uncertain, but it doesn't have to be scary. Yes, 2026 could bring rising premiums. Yes, things might get more complicated. But by staying informed and exploring all your options now, you can make smart, strategic choices for yourself and your family. Healthcare is too important to leave to chance or last-minute decisions. Call to action. Was this video helpful? Do you have a question about how these changes could affect your own health insurance plan? Drop a comment below. We respond to every question we can. And if you want to keep getting clear, practical updates about health insurance in the US, make sure to like, subscribe, and turn on notifications for Insurance Explained USA. We make insurance make sense.